Friends, today's video is a major wake-up call for everyone who has invested in SanDisk and Western Digital stocks or is currently considering it. The last 24 hours have been some of the most critical in the history of the tech and storage sectors. If you were watching the market fluctuations yesterday, you probably felt that sudden tremor in SanDisk's stock, a move that has forced both new and veteran investors to rethink their positions. First, let's talk about the massive breaking news reported by Bloomberg within the last 24 hours, which is currently the top trending topic on X. Western Digital has made a shocking decision to offload a massive stake in SanDisk, valued at approximately $3.17 billion. Now, many of you might be wondering, if a company is selling such a huge amount of shares, does it mean the ship is sinking? No, friends. The real story is much more strategic. When we look deep into the mechanics of this deal, we discover that Western Digital has handed these shares over to institutional giants like JP Morgan and Bank of America under a debt-for-equity exchange. In simple terms, Western Digital wants to wipe out its old debt and completely clean up its balance sheet to improve its financial health. But here is the twist. Western Digital offered these 5.8 million shares at a price of $545 per share. Think about it. When a stock is trading comfortably around $590 or $600, and suddenly the market learns that big institutions are getting those same shares for $545, a bit of panic is inevitable. This is exactly why SanDisk or SNDK stock, which was sitting at $590 yesterday, suddenly dropped to $574 in pre-market trading. Let's dive deeper into the price action and the indicators you see on your trading terminals. SanDisk stock is currently fighting a battle where the $600 level has become a massive psychological wall. Last night, the stock tried repeatedly to break above this $600 mark, but the selling pressure was so intense that the price was pushed back down. If we look at the technical indicators, the RSI, or Relative Strength Index, is currently trading at 43.5. For those who understand trading, an RSI between 40 and 50 indicates that the stock is neutral, but with a downward bias. This means sellers might still try to push the price lower in the short term. Additionally, the MACD indicator is sitting at 0.54. While it is technically in the bullish zone, the histogram is shrinking, a classic sign that the buyer's momentum is cooling off for the moment. However, friends, the other side of the coin is Western Digital, or WDC. While SanDisk is facing downward pressure, WDC stock is taking off like a rocket. Yesterday, WDC jumped 8% and reached near its all-time high of $309. Why is this happening? On X, the news is spreading like wildfire that Western Digital's entire 2026 hard drive production capacity is already sold out. Imagine, 2026 has just begun, and they have no more products left to sell because AI and cloud computing giants have already booked orders for the next 2 years. WDC's cloud revenue now accounts for 89% of its total sales. This means WDC is no longer just a hardware company. It has become an essential backbone of the AI revolution. Their board also recently approved a $4 billion share buyback program, showing immense confidence in their own future. From an earnings perspective, SanDisk's fundamentals remain as solid as a rock. Their revenue grew 61% compared to last year, reaching $3.3 billion. Their EPS, or earnings per share, came in at $6.20, which was far higher than what analysts expected. So why is the stock falling? The simple answer is that this is a technical pullback caused solely by this massive stake sale. Analysts still maintain a strong buy rating on SanDisk, believing that once this $545 selling pressure is absorbed, the stock will head back towards $700 or $800. Remember, over the past year, SanDisk has given its investors a 1,500% return. After such massive gains, a little bit of profit-taking is a sign of a healthy market. Now, let's talk about the final strategy. If you are a long-term investor, you should not fear this dip. Instead, view it as an opportunity. When big banks are accumulating shares at $545, that level becomes a very strong floor. If you want to enter, consider buying in small portions and wait for a confirmed breakout above $600. Entering WDC right now might be a bit risky since it is at an all-time high, so waiting for a slight correction there might be the smarter move. Friends, do you think SanDisk will touch $700 again by the end of this month? Or will Western Digital's share sale push the price even lower? Whatever your opinion is, please write it in the comment section because your insights help other investors learn. If you enjoyed this deep technical analysis and the 24-hour news update, please make sure to like this video. Don't forget to subscribe to our channel and hit the bell icon so you never miss a critical stock market update. I'll see you in the next video. Until then, invest carefully and always keep doing your own research. Important note, this video is for informational purposes only and should not be considered financial advice. Stock market investing always involves risk, and you could lose your money. Before any purchase or sale, please consult with a financial advisor or complete your own independent research. Our channel will not be responsible for any financial losses.